Good morning, ladies and gentlemen, and welcome to the Q2 H1 FY24 earnings conference call of Goodluck India Limited. We have with us today Mr. M.C. Garg, Chairman, Mr. Ram Agarwal, CEO, and Mr. Sanjay Bansal, CFO from Goodluck India Limited. At this moment, all participants are in listen-only mode. Later, we will conduct a question and answer session. At that time, you may click on the Q&A tab to ask a live question. Please note that this conference is being recorded. Incorporated in 1986, Goodluck India Limited is a reputed and established precision engineering and steel products company having an experience of over 3 decades. The company is headquartered in Ghaziabad and has 6 manufacturing units with a combined capacity of 412,000 MTPA. Its manufacturing units are located in Sikandrabad, Uttar Pradesh and Kutch, Gujarat. Goodluck's value-added product segments include engineering structures and precision fabrication, forging, precision pipes and auto tubes, and CR coils, pipes and hollow sections. The company's products find application in high-margin, high-growth downstream user industries, namely aerospace, defense, automobile, construction, etc. The company is ISO 9001:2008 certified and has a state-of-the-art NABL ISO IEC 17025 accredited quality testing lab. As of date, Goodluck's products are exported to over 100 countries and has around 600 plus customers. I would now like to request Mr. M.C. Garg, Chairman, to welcome the attendees. Thank you, and over to you, sir.
Thank you. Good morning, everybody. I welcome you all in the Concall for the H1 FY24. I really thank you all for your unwavering support and steadfast belief. Hello, can you hear me, sir?
Yes, sir. Please go ahead.
Your belief in company's mission has been instrumental in our continued success. Without your support, it would not have been possible. Together, we have embarked on a remarkable journey of transformation and growth. At the heart of our company ethos lies an unwavering commitment to provide maximum value to all our stakeholders. We take pride in being India's pioneer and leading specialized engineering product company, engaged in converting basic steel into quality engineering products. We are a high-value engineering steel product manufacturing present in precision tube, forging, structure, and GI pipe. What gives us adequate strength and adds to our perseverance is 3 decades of experience in manufacturing steel products, our strong manufacturing proficiency, and total installed capacity of 412,000 tons of TPA at our 6 manufacturing unit, 1 in Gujarat, 5 in Uttar Pradesh. It has been possible because the promoters are educated in IIT, most of them. A global footprint with exports to almost 100 countries. Since 92, we have been an export first company, and state-of-the-art quality testing lab we have in almost in all the plants. The results of the half year are in your hand. You will note that PAT has gone up by 55% year-on-year basis, whereas volume has gone up by 20%. EBITDA has grown 44%. Goodluck India Limited has shown strong performance in Q2 FY24 and H1 FY24 with strong focus on sales, production, and profitability. Our recent strategy move to raise capital of 96 crores through issuance of shares and warrants on a preferential basis and incorporation of a wholly owned subsidiary, Goodluck Defence and Aerospace, to exclusively carry on business in the defense sector. This will have a far-reaching impact on the company's growth trajectory. This half year under review was characterized by unfavorable global economic environment and ongoing market volatility with respect to commodity price shocks and tight supply chains. Demand for material outstripping supply resulted in huge inflationary pressure and also led to encountering of growth barrier to trade. But your company has weathered and marched past with the flying colors with all the problems around us. Our engagement as a pivotal player in the country infrastructure development and a category 1 supplier to domestic infrastructure company led us to gain prestigious contract of special bridges for Ahmedabad-Mumbai bullet train project, the deliveries of which have started last month. Further expand our market share, we diversified into railway business in renewable energy, road safety and infrastructure for railways and highways to propel sustainable growth. Also, I would like to mention that we have entered into a joint agreement with one of the established, very famous European manufacturers for the renewable and road safety projects. With India poised to become the third largest economy worldwide by 27-28 and alternative global manufacturing hub, with China +1, we are fully geared to tap the immense potential for powering steel and scale. Our next 3 years, auto tube of higher diameter and thickness, such as hydraulic pipe, will remain our top priority given us its domestic and global potential. For this, we are actively investing rupees 170 crore to expand its capacity from 80,000 MTPA to 130,000 MTPA. This plant is likely to be commissioned in the first quarter of the next financial year. As we move forward on this journey, we have our expertise, experience, well-motivated workforce will enable us to deliver on growth and value through innovation and efficiency. We intend to create lasting value for our shareholder, partner, and society in general. Goodluck India is fully committed to high standard of corporate governance, sustainability, and corporate social responsibility. I take this opportunity to acknowledge and thank everyone for their support. The board and management are committed to ensuring that our trajectory of business growth, financial returns, and sustained value creation continues. Also, I thank the board member for their support and valuable contribution in powering a new India and request your continued support in future. With various investments and transformational processes, we are establishing our values and become an enduring enterprise to deliver future results to all our shareholders. Now I hand over the conference to Mr. Ram Agarwal, CEO of Goodluck India Limited.
Welcome everybody. I would like to apprise you of the developments in the company, our strategies to maximize our bottom line as well as the top line. Today, as the earlier speaker has told, we are engaged in manufacturing and export of wide range of high-valued engineering steel products, including engineering structures, forgings, precision tubes, and which are catering infrastructure, solar, aerospace, defense component, auto, railways, solar, and oil and gas industry being our sunrise sectors. For Goodluck, this was a historic H1 with several landmark developments in our progressive journey. Our strategy to enhance resilience in an environment of uncertainty contribute to our sound performance. Despite the challenges, we reported robust growth driven by our strategic focus on high margin, value-added product, high growth sectors, which help improve our bottom line. We took a strategic decision to transition towards solar energy to fulfill our electricity requirement at our plants in Uttar Pradesh. Because today everybody is talking zero carbon. Somebody is giving 2030, somebody is saying 2047. So your company has put a step forward in this regard. With this significant step, we are expecting to offset over 300 million kg CO2 emission during the project technical lifetime, which is equivalent to planting over 6 lakh trees. In another strategic development, we made significant inroads into road safety products by collaborating with a foreign company. Further, as OEM customers are our primary USP, we undertook several brand building initiatives this year to identify new markets, increase our presence in existing markets, both in India and overseas, to serve our predominant customer segment. The ability to, this is our, I may call it our USP, ability to constantly shuffle markets and also our product mix helps us cater to evolving needs of our large customer base, both India as well as overseas. We worked out strategies to maximize one category of raw material to keep stock selling under one check. This reshuffle also ensured value addition in existing products and helped us explore new market destinations while allaying market pressures during market volatility. We have evaluated options to avail an advance receipt from our customers against raw materials to manage our working capital adequacy. To ensure superior quality standards across all our manufacturing products, we have imbibed the zero tolerance policy across all our verticals for every employee. Undertaking regular work study of machines and everything we are doing. Capacity utilization is one of the points we are taking most of the care. Additionally, consistently assessing and enhancing our production facilities, conducting R&D for new products with the same asset base, as well as mechanizing and digitalizing our manufacturing operation collectively led to cost reduction and enhance our efficiency. The Navision software we introduced in all verticals provided us with a competitive edge in market analysis and in taking proactive action towards tapping new opportunities. We upgraded our tube mill as per global standards to develop new shapes and sizes of torque tubes, which is the darling of the market right now. We also undertook various training and interactive programs for our employees to help them grow and become our partners in our growth story too. So basically we are aiming for the all side growth, where our customer, our employee, everybody is the partner. Value-added products will continue to be our driving force of future growth. We are working on value addition in high volume, low margin GI pipe business. Our aim is to add more value-added engineering products to our product portfolio by upgrading regular products. We are working on expanding the capacities of our high value-added product segments. We are expanding our value-added verticals while also transforming our low value-added to high value-added products. We shall also capitalize on our strength in supplying high-quality material to defense and aerospace, oil and gas, railways, and other key sectors in India. With newly added capacities and measures undertaken to turn around GI business, we are well positioned to benefit from the government's planned infrastructure spending over the next few years. And lastly, we will continue maintaining our strong focus on increasing our EBITDA margin and optimizing our capital structure to maximize our shareholders' return. We will continue to invest in equilibrating equipment to enhance our productivity. We will continue reshuffling our product and market mix through flexible marketing strategies to further enhance our operational efficiency and enhance our EBITDA margin. Going forward, the rising demand for steel, favorable government policies, and a conducive business environment are expected to result into an even brighter future for your company. Now, I hand over this conference call to Mr. Sanjay Bansal, CFO, company, to apprise you of our financial performance for his H1 FY24.
Thank you, sir. Good morning, everybody. At the outset, I, Sanjay Bansal, CFO on behalf of Goodluck, welcome you all for joining us for conference on performance of the company in Q2 and first half year financial year 2024. Regarding Q2 performance, standalone, the sales was increased to rupees 885.99 crores as against rupees 779.20 crores during Q2 of previous year, registering a growth of 14% about. However, EBITDA for the quarter stood at the rate of 8.3% of the sales of rupees 73.68 crores as against 51.37 crores during Q2 of previous year. The profit before tax, including other comprehensive income, was at rupees 45.96 crores in Q2 as compared to rupees 27.95 crores in Q2 of previous year. However, PAT in quarter 2 of current year was rupees 34.70 crores as against 28.59 crores in quarter 2 of current year, registering a growth of 21% Q basis. The performance of the company in H1 of current FY24, the sales has been increased by 9%. EBITDA margin has improved to rupees 144.55 crores with EBITDA margin rate 8.29% of net sales as against 6.53% during last 6 months of financial year 2023. However, the PAT margins has increased to rupees 63.29 crores, registering a growth of more than 50% as compared to first half of the previous year. The earning per share has been at rupees 12.73 per share in quarter 2 of current year as against 7.83 rupees 7.83 per share during quarter 2 of previous year. However, EPS of the company in 6 months of current financial year for standalone was at rupees 23.22 per share. On financial front, our interest cost has marginally gone up due to increase in level of activity during first 6 months of current year as compared to previous year. Also, employee salary and benefits have been increased due to annual increment and increase in level of activity as compared to previous year. Thank you very much.
So should we start the Q&A session?
Yeah.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Aditya Jawar from AJ Capital. Please go ahead.
Yeah, thanks for the opportunity. Great set of numbers from the management. I have a couple of questions. First is related to working capital. I see the working capital is stretched. So I want the breakup of working capital in each segment. Which segment is taking a lot of working capital? That is the first question.
You see, working capital segment-wise detail is not readily available, but overall working capital requirement is within the norms of the industry, and it is perfectly being operated and up to the mark as far as fund availability is concerned. Thank you.
What is the working capital base currently?
Working capital, total fund based and non-fund based, both are 600 crores.
Yeah, in days?
Pardon?
In days, number of days.
Number of days is 40 days about.
40 days.
Okay. Any plans to decrease this working capital, or this will be steady this number?
Always we try to decrease the working capital.
Okay. And the second part is, if I see your data right, I think forging and precision is having the high margin business, and the other two are dragging. So how do you see going forward our margins coming? Currently it is at 8%. Can we achieve 10% margin? That is the first question. And the second question is, if you see you are mixing a bad business with a good business, so is there any timeline to demerge? Because we are having a lot of companies under one roof. So there are any plans of demerging the different business to get the value accretion for the shareholders?
Sir, basically, if you see, there is no bad business we have. As I had already stated, that the GI business, which you are saying it is a low margin business, we are just transforming it into the solar business, which is a high margin business. So there is a process of transformation of the product, which are taking lesser EBITDA. We are trying to convert it into higher EBITDA with the same assets. You just go through my speech, and there I have specifically told it.
What are the EBITDA percentage? Demerger.
It is not on the table. The demerger plant is not on the table because all the verticals are doing good, and the verticals which are having a big issue, we are transforming it. So the demerger is not on the table right now.
And margin guidance for the next 1 or 2 years?
So basically right now this year we will be almost 8.4, 8.5 EBITDA, and in the coming 2-3 years it will be reaching to 9.5 plus.
Okay, 1%. So basically it is a mixed change, or it will be basically GI pipes also contributing?
It is a change. It is a change of the product profile basically. What we are doing, a value addition will be giving more, and the lesser value addition it will be giving less. So the margin will increase. This quarter is itself showing our sales has increased by 20%, but whereas our profits have surged by 70%. So what we are doing, transforming business, because there are new opportunities in the market, and we are taking those opportunities, but using our same what we have. The asset base we are having the same. So margins are increasing.
And the long-term debt, are we trying to decrease?
Yes, definitely. We are every year some long-term is going back. It is being repaid.
In the next 2 years, do you plan to decrease significantly by 50%?
Yes, we always aim that the long term should be zero, but practically it is not possible. So, but we will try. We are trying.
On the revenue part, for this year it is 3,500 crores. In the next 2 years it is 5,000 crores. Do we stand with that still?
This year it should be 3,500. Next year it should be 4,000, and then it should be 4,500 plus. Because of third year, I cannot see right today.
Okay. Thank you, sir. All the best.
Thank you.
Thank you. Our next question is from the line of Darshil Pandya from Finterest Capital. Please go ahead.
Hello. Hi, sir. We know that you don't give a order book, status, but any visibility or, the last time that you gave on all the segments?
Basically, we have 5 verticals, and every vertical has a different order book size. But in all, if aggregate you will see, so there is an order book of almost 3 to 4 months in the regular products, and where these are the infrastructure projects, there is a order book of pendency of 9 months to 1 year.
Okay. And sir, I would like to hear some more developments from defense and solar. What is the thought process of the management on these 2 segments where you are seeing some good traction?
Basically, solar. Everybody is looking to solar because thermal capacity, thermal power, nobody wants to use, and with the powers, with these tussles going on, everybody wants less reliance on the oil. So solar is definitely, and we are having an edge because we are doing a torque tubes in that, where it's a new field, but everybody is trying to put gigawatts in terms of this tracker tubes, and we are pioneer in making the tracker tubes. So in solar, we look forward in the coming 2-3 years, it will transform to the right now business what we are doing. Suppose it is 50 crores, so it will be 10 times business in next 3 years. In terms of solar, and in defense, what you have asked, in defense, definitely we have been working for last 4-5 years. We are making some products for the defense because it's their prototypes are made and then order comes. It's a slow process, but we have been doing with many products, and now we understand that it's the time to go for a big production for scaling up. So we will be making more products in our Goodluck defense and aerospace in the coming years.
And sir, have you seen any shift in the export business as a percentage of the total revenue?
Percentage of export business will remain same. With the growing volume, the volume export will grow, but percentage may not grow much.
Okay. All right. And one last question, if you say. Sir, what is the current, on the new plant that is coming up on Q1 FY25? What is the current status of that? Last time we had it was the land was purchased and orders for machinery have been.
Land acquired, developed. The building is coming up, which will be ready by December, and the plant erection should start by end of January. And we are right on track to commission the plant in the first quarter of the next year.
And how much time does it take to come up to the optimum utilization or?
The ramping of our capacity will take minimum 6 months after commissioning. Yes.
So that's it. Thank you so much from mine. All the best.
Thank you. Our next question is from the line of Piyush Agarwal from SOIC LLP. Please go ahead.
Hi, thank you for the opportunity, sir. So, sir, first question was, what is our capacity expansion plan in each and every one of our divisions? Because in forging unit, we are also doing some capacity expansion. So can you just give us the numbers of the capacity?
Basically, our total installed capacity is 412,000 tons, what we are given, and it is divided in 5 verticals. So the division we can give you later on. You can go with the other question because.
So, just for our understanding, in the forging unit and the precision engineered tubes, so precision engineered tubes, we have the capacity expansion plan. What are the capacity expansion plan in the forging unit especially?
Look, in forging unit, this aerospace and defense is an addition to the forging capacity only. All the items which will be making for aerospace and defense will be adding to the forging capacity only. As on date, our capacity of forging is 30,000 tons, which is likely to go up to 50,000 tons in next 2 years after commissioning of this aerospace and defense plant. It will take 1.5 years.
Right. And so what is the EBITDA per ton that we are doing in the forging unit right now? Do we expect that to increase?
Right now, it is 12 to 13% in forgings, and the product addition, it will increase in the coming years.
Right. And if you're targeting this defense vertical, don't you think that the working capital will stretch a bit more or that will be compensated by the margin side?
I'm not able to hear you. Can you repeat your question?
Sir, this is defense vertical, like in the forging unit that we are targeting. So don't you think our working capital will increase a bit or will that be compensated by the higher margins that we earn?
Working,
Definitely higher margins will reduce the working capital requirement.
Right. And first question from my side, like after all CapExes are done and all these value addition work is done, do we expect that EBITDA margins on a consolidated basis to start increasing in next 1 or 2 years?
Our aim is to increase the EBITDA margin progressively, which you are finding the trend for last 1 year, and if we continue at least for next 2 years, I can see the EBITDA margin are going to improve. Our aim is to achieve a 10% EBITDA margin next 3 years, for 9.5 to 10%.
Okay. Thank you so much and all the best.
Thank you. Our next question is from the line of Rohit Pawar from RB Investments. Please go ahead.
Good morning, sir. Thank you for the opportunity. So my question is, in accordance to the Gati Shakti National Master Plan, we are placed to be a significant player. So may I know the competitive advantages regarding to it?
Pardon? I could not understand. Can you repeat the question again, sir?
Yes. In accordance with the Gati Shakti National Master Plan.
Sir, sorry to interrupt. May we request you to use your handset, please? Your voice is muffled, sir.
Hello.
Hello?
Hello?
Yes, sir, Mr. Pawar. Can you hear us? Mr. Pawar, can you hear us?
Yes, sir. Am I audible?
Yes, sir. Please go ahead.
Yes, sir. According to the Gati Shakti National Master Plan, we are placed to be a significant player. So, may I know the competitive advantages that our company is having?
Yeah. In this Gati Shakti plan, government is putting pressure, government is putting all the focus on the infrastructure products. And we are there to serve from northern region, we are there to serve from western region. So we have one competitive advantage. Basically, in all the new coming trains, there are Vande Bharat train 160 kilometers, there is bullet train 348 kilometers. So we are going for the higher speed section where fabrication is quite a difficult, and we have surpassed those difficulties, and now we are one of the premium companies who can make these technical and critical bridges for the railways, for the NHAI. So I think we are better placed for this Gati Shakti plan.
Thank you, sir. Thank you. That's all.
Thank you. Next question is from the line of Vivek Gautam from GS Investment. Please go ahead.
Yeah, am I audible?
Yes, sir. Please go ahead.
Yeah. Sir, our company got listed in 90s and was sleeping for a very long time. Good part is that unlike so many companies which came with IPOs in 90s and disappeared, our company is still there. And what has been the recent trigger change for which the company performance started improving? Is it the next generation is coming in? And you have been always very, very highly educated from IIT and ISM promoter quality. And but what changed? What have been the triggers of late wherein the company's performance has started improving? And the major concern is on the commodity business of GI pipe. So basically, how long will it take to move from that low value to high value? And if you can also tell about the opportunity size for us in different segments, what is the growth of rate we expect in time to come, sir? Thank you.
Sir, I must tell you, quickly identified, we were growing all the time investing. Right from 2005 to 2018, we kept on investing. And it is a time has come of the take-off stage, I should say. And now the products have come of age, Indian policy has changed, Indian environment of business has changed, and we are trying to avail the opportunity and ramping our production capacity, and that is the only trigger. Our policy has been incrementally low investment, high return. This is what we are doing. All the production facilities are being streamlined to have a better production. That is why you see for the last 3 years, we have been growing at an average rate of 20%. And we expect to continue to grow at that rate. We are not in a hurry to grow at 100%. And consolidate our achievements and march forward. That is the only reason.
Can you tell something about the next generation, sir, who is now taking interest in the business?
They are not only taking interest, they are in charge of the business.
Mm-hmm.
They are all in charge of the business, doing their work. Old men are only watching them.
Very good. No, your promoter quality as far as the education part goes is almost second to none in India. And I'm not very sure that people might be aware about your background. And so what is the opportunity size and the growth rate which we expect and the commodity business that is a major concern of GI pipe, and how long will it take we can move to high valued segment? When will the capex get completed, sir?
Sir, I must say, that is the advantage here. For raw material is commodity. Our products are engineering. Commodity, we take advantage being our raw material being commodity, and our products are not commodity. We add value to it. Our each product made is specific to the customer requirement. That is the only advantage we have.
Okay, sir. Keep up the good work, sir. Thank you.
Thank you. Our next question is from the line of Manan Shah from Moneybee Investment Advisor. Please go ahead.
Yeah, hi. Congratulations on a good set of numbers and thank you for the opportunity.
Sir, the 20% growth that we witnessed this quarter, so which segment contributed to this growth? If you can highlight a little bit on that part.
Auto tube segment is giving boost to our this 20% development. However, the other segments have also contributed, but significantly, if you want to know, it is the auto tube section which is giving the boost.
Okay. And now with this volume that we did in the past quarter, I believe we would be at optimum utilization across our all segments. So are we confident of maintaining this volume? Then is there any possibility of any debottlenecking whereby we can achieve higher volumes in the upcoming quarters?
I can tell you, debottlenecking is an ongoing process, continuous process. It is happening. And this is what we are doing, and the growth will continue with least of investment. Improving the balancing equipment is our core. By like that, I give you an example in metallics, that is the Gujarat plant, we have made an investment around 20 crores, but it will add value of almost 300 crore annually to us. It will improve exports, declining exports of the country. It will give a boost to us in exports. This is what we are doing in every plant. In debottlenecking, everywhere continuous exercise. This is what our research R&D department keeps on working.
Right. Secondly, on the forging side, in the earlier comment, you mentioned that we make around 12 to 13% margins in the forging segment. Now, when I compare with other listed forging players like Forging or RK Forging, it seems we are on the lower side of the range in terms of margins. So, I mean, why is there any differential that we do? Is it the product because of which our margins are only 12-13% and not upwards of 15 to 18% sort of margins?
I perfectly agree with you. Our volumes are lower. Costs are higher. We are working out on it. The extra emphasis on adding products of defense and aerospace will bring the difference very soon. You will see it in coming years. The difference will not be there. We might be better than that.
So the incremental business that we are looking to add in the forging segment, the defense, so what sort of margins do those products enjoy?
Much better than what others are doing.
Okay, understood. So what sort of capex are we looking at in this forging segment?
It is under planning right now. We will let you know when the time comes, when we will float it, we will let you know. But the plan is on the table, and we are working on it.
So I asked because we announced in this press release that we are again looking to raise more funds, because I believe a couple of months back only we raised funds around 66 crore by issue of warrants, which I believe was for the forging segment. Now again we are looking to raise more funds. So just to get an idea of what sort of capex are we looking at and what sort of fundraise are we looking at?
66 crores rupees raised for expansion plan in auto tube section, and fresh issue of shares would further investment in subsidiary about 40 crore, capital expenditure of new bottlenecking equipment 14 crore, and repayment of term loans. The company want to prepay the loans, so we will repay existing loans so that interest burden may reduce.
Sure, thanks. That was helpful. I'll get back in the queue.
Thank you. Our next question is from the line of Harsh Mulchandani from Chris PMS. Please go ahead.
Thank you for the opportunity. Congrats on great set of numbers. Wanted to understand when do we see a significant contribution of the new segments, defense and aerospace, touching say 10%? Do we expect that to happen in next 2 to 3 years, or it will take even a longer time frame to reach that number?
It should happen within the next 4 years, not 3 years.
Okay, got it. And another question which I had was around if you could provide a segment-wise split as to, I was asked in the previous question also of volumes. So I understand that auto, etc., is doing well for us, but going forward, which segment would then, pick up and drive for us along with defense, etc., would also be a growth driver. But just wanted to understand that you also have these value-added products which are kicking in across. So how do you see the segment volume pickup also happening along with these expansion of value in terms of EBITDA?
There are other sectors as well which are doing well. One is the infra sector, because India is moving for infrastructure, and that one sector we are expanding, and in coming 2-3 years you will see a good portion of our turnover comes from that, and a good portion of margin comes from that. Along with it, forging you have already mentioned, and the fourth one is the solar. The solar segment, which we have just started a year back, it will add to the bottom line. It will add to the top line. So these 4 sectors: auto tubes, our forgings, our infrastructure, and solar. These 4 sectors will drive the company into future.
Got it. Okay. Thank you so much. That's all.
Thank you. Before we take the next question, a reminder to all participants, you may press star and 1 to ask a question. Our next question is a follow-up question from Mr. Aditya Jawar from AG Capital. Please go ahead.
Yeah, thanks again. Sir, you said on the working capital side 40 days, right? How are you calculating working capital? Because when I matched with my numbers, I did not get that.
Sir, you kindly send us your query over email. We will provide detailed working on it.
Okay. Sure, sir. Sure. Thanks.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Piyush Agarwal from SOIC LLP. Please go ahead.
So thank you for the opportunity once again, sir. So I just had a suggestion. If we can have the volume-wise breakup of each and every segment in our PPT, and also our CapEx, also capacity expansion bifurcation, where all we are spending that, because we have 4 to 5 units, so for investors it sometimes becomes extremely difficult to check where the capacity expansion is going or where the capital is allocating or which segment is going. So it's just a suggestion from our side.
Mr. Agrawal, can you speak a little slower? Please repeat your query.
Right. So, sir, it was just a suggestion from our side. In the presentation, that is, we have the volume breakup of each and every segment, and also the capacity expansion plan for each and every segment, so that we investors can get a better idea to judge your company.
Sure, PPT.
Sure, sir. We will give you the PPT where the details you are seeking for. Those details are available there. Our secretary will send you.
Okay.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Apurv Singh from Panchatra Investors. Please go ahead.
Hi, sir. Congrats for the numbers. Just wanted to understand some visibility on the defense side, order visibility, given the CapEx we are doing. So it will be really helpful to understand what are we looking in the future there.
We are already supplying for last 2 years for protos in missile system, and the protos have been approved. The production orders are expected any time. Now we are embarked upon in aerospace and defense subsidiary. We will be making components for defense, for which there happens to be a very big export market. Happens to be a very big export market, and this project is being lined up. It's on the blueprint drawing board, and the implementation should take place in 1.5 years. The visibility is very bright. Future is very bright. We are expecting I'm sure this plan could be a game changer for the company's growth trajectory.
Thanks a lot, sir. All the best. This is the question I had.
Ladies and gentlemen, you may press star and one to ask a question. Our next question is from the line of Nirvan Laha, who is an investor. Please go ahead.
Hi, sir. Thank you so much for the opportunity. I just wanted to understand your H1 sales volumes, please, and if you can call out the volumes in the forging segment and the precision segment separately for H1 and for the same period last year.
You see, current 6 months we achieved 1,83,000 metric tons. 1,83,000 metric tons volume. So detailed working we will provide you. You kindly send us the mail. Segment wise.
What was the same? Sure, sir. I sent you an email. What was the same number for last year, H1, against 183,000?
Both the information we will provide you.
Okay, all right. And my second question is, if I look at your cash flow from operations and compare it to your EBITDA over the last many years, the ratio is actually quite low, something like 40%, and this has consistently been the trend. So this means that free cash flow generation has been quite low because we have consistently invested a lot in fixed assets. So what is the plan to improve this? Because because I can see that receivables and inventories have consistently eaten into your cash flow from operations. So is there a focused effort to improve this, because it can then improve your debt to equity ratios and even prevent future capital raises?
Yes, sir. We are our always endeavor to improve the cash flows, and we are raising the funds to repay the existing loans also in order to improve our ratios. So this is continuous process, and we are doing our efforts to make the profit maximization.
Sir, actually, raising capital to pay off debt will not improve your operating cash flow. So I'm trying to focus on your
operating inventory. Sorry. You please continue.
No, sir. That was my question. That operating cash flow, are you seeing, or do you have any targets of improving that so that we become a positive free cash flow company? Because for the last 2 years, 3 years, we have not been able to generate free cash flow. So is there a focused effort towards improving operating cash flow?
Yes, sir. In fact, as our management told you that EBITDA margin next 2-3 years would increase to 9.5% as against 8.40 currently. So definitely operation margins will improve, and it will improve the cash flows.
Okay, sir. All right. Thank you so much, and all the very best.
Thank you.
Thank you. Our next question is from the line of Gunjan Kabra from Niveshaay. Please go ahead.
Hi, sir. Congratulations for the good set of numbers, and thank you for the opportunity.
Ms. Kabra, may we request you to use your handset, please? Your voice is muffled, ma'am.
Is it fine now?
Yes, ma'am. Please go ahead.
Yeah. Sir, I wanted to understand, sorry I joined the call a little late, so if you have answered. Wanted to know if the export revenue in FY22 was much higher, and FY23 there was a slowdown in the demand. So right now, how are we seeing the export market, particularly for our tube and the forging business? And what's the kind of order book like as on, I guess, 2023, we closed the order book of 900 crores. So what's the kind of order book that we expect right now, and what kind of a visibility we have for 5-6 months?
We have almost 25 years of exports performance with us. As on date, last year we achieved nearly 1,000 crore. Year before also we achieved 1,000 crore exports. And this year also we are likely to achieve, in spite of the headwind in the export market, Indian export slowing, we are adding incremental capacities to improve and have an edge in the export market. And we expect to clock almost 900 to 1,000 crore this year also.
So 900,000 crores in FY24 also we are considering it's from export market.
Look, in spite of Indian exports going down, the world demand is going down, we'll maintain our share of exports. Because of our quality, commitment and consistency of export gives us an advantage over others.
Okay. And so what's the kind of order book that we have right now?
Almost 2 months.
Is it possible to share the number or?
For exports. Under me?
Not for exports generally, for the overall business I was trying to understand what's the order book that we have right now?
Basically for all there are 5 verticals and every vertical has a different order book. So if you take for the general product, it is 3.5 months. But for the infrastructure products like forging, like bullet train, there is a visibility of 9 months to 12 months.
Okay. Thank you so much and good luck.
Thank you. Ladies and gentlemen, that was the last question of our question and answer session. As there are no further questions, I would now like to hand the conference over to Mr. Ram Agarwal, CEO of Goodluck India Limited, for closing comments.
I thank you everybody to join this Concall. And in my closing comments, I would like to put some light on what we are doing in defense and aerospace, because everybody was wanted to know what we are doing. Basically, we have been doing in defense and aerospace for the last 4 or 5 years, but it all was on the photo basis. But now, with the results, what we have seen in last 4 or 5 years, and with the Indian government giving a impetus on make in India for all the products. Normally, if you go 2 years back, there were almost 100 million import in India. But now government has put a target of at least 30% made in India. So with this impetus, we have started getting many inquiries, we have started getting many orders, and we thought it is the right time with our rich experience and with our plant and machinery. Then we thought to scale this defense and aerospace business, and for this we are already going to give 40 crores in the coming fundraising. So we hope this product will give a turnover of almost 300-400 crore additionally after 3-4 years. It will take time, but it will give with a very good margin. It will give a very good top line. It will give a very good EBITDA margin. So we all pray that we get this. And the strategy remains for Goodluck. We will try to put, like in solar we have said, we have not put up any new plant, but we have used our old plant and we transformed it to make these solar tracker tubes. So it has given us the advantage. By putting no more money, we have got good bottom lines. So we will be trying this all for our all products, and we go forward. With your support, we hope that we will have the new heights.
Sir, I would like to emphasize the policy of Goodluck is no volume without value and no value without volume. That is our tagline of any development decision we take in Goodluck.
Thanks everybody.
Thank you.
Thank you. Ladies and gentlemen, on behalf of Goodluck India Limited, that concludes today's session. Thank you for your participation. You may now disconnect your lines.